All right. So I wanted to get us together so we can bring some education to clients and buyers getting into their first home purchase. And I couldn't think of anybody better than you to focus on credit scores. When everybody's shopping for rates, now that we're up in that 6-7% range, everybody's looking to save. Even an eighth will make a big difference for them on the interest rate. And they don't realize that shopping from lender to lender, that difference is about this big, but they can save this much by focusing much more on their credit score. So I wanted to kind of just break down all of those different avenues for them to get as high as they possibly can on their scores.
Yeah, I think that's probably one of the most overlooked things, which is, what's considered a great credit score for a mortgage. And, those a little bit of a difference makes a massive difference when you are actually, looking to purchase. And I think what kind of adds to that confusion to the typical consumer is just all these free credit scores that are floating around.
Hmm.
You've probably had, you could probably even speak to how many conversations you've had where you've had to explain to somebody that the credit score they get from Credit Karma or their credit card is not the version of the score that you use when you actually make a mortgage underwriting decision.
That's right. I actually just had one this week where they look on that and they're like, yeah, I have no credit card debt. I'm sitting on about a 720 credit score. And then when they fill out a mortgage application and I pull the report, it ends up being in that mid 600 range. So can you kind of explain the disparity between what they're seeing and what we end up with?
Yeah, so I call that like the land of confusion because the typical consumer makes an assumption that that there's one credit score and whatever you get, wherever you get, that's the same score. But the reality, it's a little bit different. So ultimately, what it comes down to, what a lot of consumers don't realize is the credit scores, they weren't designed to be given out to consumers. They're actually designed for lenders to be able to gauge their risk. And as this space evolved, they started creating different versions of scores. So what a lot of people don't know is that credit scores are transaction specific. And what that ultimately means is a mortgage lender is going to care more about what is their risk, what is the likelihood of this potential borrower defaulting on a mortgage. They don't really care about an auto loan. An auto lender is going to care more about how you're going to pay your auto loan, and your auto loan history is going to have more weight. So they're transaction specific. They're weighted differently to be able to help the lender effectively assess their risk. So what it comes down to is these are advanced versions of FICO scores that are not freely given out. And like I said, they're essentially transaction specific. So if you went in tomorrow and applied for a credit card, tried to get pre-approved for a mortgage, and went into a car dealer, all three of them are going to use different versions of the FICO score. And every one of those versions that they're using is never given out for free.
Yeah.
That's where the confusion kind of sets in.